whatever deal you do, make sure that somebody on your team has done that same deal many times, that you are not investing somebody else's money on something that nobody has done before, unless the investors know that and they know they're taking a risk.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. I am excited to be able to welcome here Kathy Fettke with the Real Wealth Network. So, Kathy, let me read your bio just for a moment, and I'm going to keep it really, really short because I think that the beginning part of your bio really speaks right to it. So she's a passion for researching and sharing the most important facts on real estate and economics, which is what you're also known for. Kathy is a frequent guest expert on such media as CNN, CNBC, Fox News, NPR, CBS, Marketwatch, and the Wall Street Journal. She is the author of the #1 best-selling Retire Rich with Rentals and is the host of the Real Wealth Show, which is a featured podcast on iTunes with listeners on 133 different countries, or in 133 different countries. But I think that your story and how you got into real estate and how you transitioned from being a coach to being a real estate expert is a vital one. So let's go ahead and start with that story.
The transition? Well, it started when I got married and my husband was a personal trainer. He wanted to have a bunch of personal training studios, and I was going to be a stay-at-home mom. I also had a career in broadcasting that I was going to put on the side. And he got really bored with personal training. So he saw this little ad in the paper for personal coaching, which nobody knew what that was at the time. And he wanted to do it. I thought he was crazy. Anyway, he was one of the first coaches. He came back from his coach training with a completely different way of communicating with me, and so much more sophisticated. And I thought, no, I don't want him to have this much more ability to communicate than I have. So I went, and we both became certified coaches. So I was raising the kids, sometimes, in the room on my lap while coaching. And he was traveling the country with his book, Extreme Success, and just teaching people how to live a better life. And everything was amazing. We bought our first house, way too big for us. It was a 6-bedroom right outside of San Francisco. We didn't know anything about money. No one ever taught us about money. So we bought a big house, and then, just kind of did what people do. We saved 10%. We didn't know how to invest, but we had friends who did. So we invested 10% in the stock market, and I think a little bit set aside for savings. And that's what we did. Well, right around 2002, he saw a freckle on his forehead. He was actually on his way. He was on his national book tour. He noticed this freckle, got it checked, turned out to be melanoma. After further research, they thought it had spread to his liver. And the doctor said, well, it looks like if that's the case, you probably have about 6 months. So that was an example of how we should never get too attached to anything, because here we were at the top of our game, 2 beautiful children, a new house, his book had taken off, and then bam. So I refused to believe it, and he did too. He kind of, that's 100% faith is what's required in times like this. So I was like, nope, I'm not going to believe the doctor. He's not going to believe the doctor, but we need to do something. So I thought, well, if I'm going to take over the finances and he's going to get better, I better figure out how to do that. That's how it started. And I still had my radio show in San Francisco from my broadcast days. I didn't make any money from it, but I just liked being able to continue to do that on Saturdays. And so I just turned it completely to, how do I make money? How do I sort of take over the finances for him? We very quickly blew through the savings, and everything that we had been taught to do went quickly. So that little plan didn't work. We were kind of left with this house payment we could barely afford, and me trying to, it was like a $4,000 a month mortgage alone. And I hadn't been working for a while. I did not know how to make that kind of money. So I just did what I did know how to do. And I thought, I understand house. I know how to live in a house. I know how to be a renter. So I just took these 2 rooms below the house and turned them into rentals. One was like a little in-law unit and one was a office space. And I just went on Craigslist and we rented them out. And you know, Rich is like, I don't know if I want strangers living here. And I'm like, you don't have a choice. So
No, we're making this work. We're moving
we're
on.
gonna make this work.
Yes, right.
Yeah, and I, you know, we charged like $1,200 for one unit, and you know, about $1,000, so it was $2,200.
Mm-hmm.
That really lowered the mortgage, and that was really our entree into being landlords. It helped us through a very difficult time.
Well, I mean, it went beyond that. I mean, I've only heard your story a couple of times, but in my memory of your story is that, you know, you've now built the Real Wealth Network around that, and you help a lot of people, and you help place a lot of people into real estate investments, as well as, you know, following the economics and speaking, you know, often I've seen you speak at a couple of different meetings, and your book. I mean, you have rolled this moment that was born out of necessity, that was born out of a requirement, and you could say it's an intervention of grace or just an intervention of fate, depending upon what your belief system is. And you've created something very amazing and dynamic out of it. So talk about your Real Wealth Network and what it does now.
Yes, Real Wealth is mainly we are helping educate people so that they know how to prepare for their future and have a retirement and understand what will really get them there, because you know, investing in you know, bond or something that returns 5%, you know, it's just, or saving 10%, and it's not going to get you there. You know, we're living longer, and you know, things happen like in our case that can wipe it all out. So Real Wealth teaches people how to build sustainable wealth through real estate that can take care of you when you don't want to work anymore. And so I love that. And teaching what I learned on my own show, on what is now the Real Wealth Show, I just suddenly opened the door to this whole new world that nobody had ever taught me. Mm-hmm. And this was 18 years ago. So there's a lot more out there. But back then, the only place you would learn this, there were like real estate clubs, but they were really just meant to sell books and tapes. That was their revenue generation, is, you know, have a speaker, and if that speaker could really sell the most tapes, you'd split it with them, and that's all there was. And it wasn't necessarily information that worked. So it was difficult to really learn, you know, how people create passive income, and specifically through real estate. And so I, at the time, just interviewed mortgage brokers and credit repair people and insurance companies and property managers. And it was like, oh my gosh, this is amazing. This is amazing. The leverage alone, the fact that you could go into a bank, and at the time, this was in 2003, at the time you could go into a bank and get an unlimited number of investment properties with no money down. It was insane. So it's like, why doesn't everybody know this? So that's what we continue to do today at Real Wealth, is teach people these secrets. They're not so secretive anymore because there's so many podcasts. There's more people, you know, meetups and everything. But I tell you what, if you talk to the person on the corner at the local cafe, I bet they don't know this stuff.
Right.
So,
or they have a very narrow understanding of it. I mean, just like, kind of like how you started, like, oh, well, I can buy a house and I can rent it. Right? But I don't want to do that because I don't want them in my home, or I don't want to do that because I don't want to own it out of state, or I don't want to do that because it seems too complicated, or gee, I'm a doctor, I don't have time to focus on it. I don't know anything about passive investing in real estate that's going to allow me to build my retirement account and get 10% or more return on my capital. Like they don't know the depth of real estate.
Yeah. Even
if they only know this much, right? I can rent a house.
And real estate professionals as well, real estate agents often don't know some of these incredible tax benefits that people have, and they get from, you know, just if you live in a house for 2 years and maybe rent it out for 3, if you sell it, you get up to $500,000 tax free if you're married. I mean, that's insane.
Yes,
it's incredible. So, you know, we're still teaching. It's never ending. I can't believe after 18 years I'm still learning. I'm still learning every day. So it's an exciting field. We do lots of free education. And we also learned that, at least in California, it can be tough to do business. So we had to learn how to invest outside of California. So there's a whole learning around that. And that's what we do today still, is help California investors invest in other places like Texas and Florida and Nevada, where there's no state income tax and the cash flow is higher. And there's more of a demographic shift to those areas.
Well, and the way that you've managed to diversify, because I mean, you still basically keep your sanity. You're not traveling to 4 or 5 different states on a weekly basis, I'm assuming.
Nope,
right?
not anymore.
Nope, not anybody. Then there probably was a time. I mean, when you were first developing, and you were developing your teams on the ground, I suspect you were doing that.
Oh yeah.
But I again, having listened to you speak before, I know that you're dedicated to helping people, but you're also keeping your own sense of balance in your life. And so you've developed these teams on the ground, and that's, you're more than just an educational model from what I understand. It's like, yes, you offer education, you offer a wealth of podcasts. I actually don't know, do you actually offer educational courses specifically as well? Or do you really offer courses in relationship to people being able to invest? Like, I actually don't fully understand your education model. So teach me about it.
Yeah, we've just kind of continued to offer free education. Every now and then we'll say, how about we just charge $100 a year or something like that. But, I don't know. It's something about when I started, I couldn't stand some of the sleazy people that were selling these, books on tape and stuff, and it was outdated information that didn't work, and the slick salespeople behind, running to the back of the room to get what they sold. So I don't know. We just kind of made this commitment to make the education free. We also offer free consulting and on your portfolio and so forth. But we are a for-profit business. Rich is a broker and I'm an agent. And when we started, I was a mortgage broker. Mm-hmm. So that's how we monetized it. And then when I realized, well, California is not the place to be investing really right now, because on the show back in 2005, I had Robert Kiyosaki on as one of my guests, and I was still learning. I was just 2 years into real estate. So I was just like, I don't know, just open mind, like teach me everything. And he came on and said, even though everybody's clamoring for real estate, 2005 was the year, every year. Yep. Every headline, mm-hmm. in 2004, I think home prices doubled in Las Vegas and stuff. So, and everyone's like, I got to buy real estate. So it was a frenzy. And so I bring Kiyosaki on and he's like, no, you want to be selling. It's like, what? Well, everybody's buying, why would you be selling? It's like, because it's peaked. It was very precise and very clear when the loans would reset. And I was in the mortgage business, so I knew there were mostly liar loans. I knew what was happening behind the scenes. And I knew that it didn't make sense, but I didn't know how it would play out. I was too new. I just thought, well, this is a weird financial world. Right. But then that's when Kiyosaki told me, oh no, it's not going to work, because you can't give people loans they can't pay back. So I don't know who made those horrible decisions in the boardroom. But Kiyosaki said, no, it's very clear that starting in 2007, these loans reset. People won't be able to afford them, and there's going to be a collapse of real estate. It was not a surprise to people who were paying attention. So that was my first lesson of, you have to pay attention, and the masses don't know. Mm-hmm. You've got to follow the people who have been in it, and they're active, and they have been through down markets, because they're a little more cautious, mm-hmm. a lot more cautious. So I thought, well, that makes a lot of sense. So we kind of followed him. He explained to me then that the U.S. is not one real estate market. It's a whole bunch of different markets, all in different phases of their market cycle. And that at that phase, California had peaked. Texas was just beginning its boom, because all these jobs were moving there and people were moving there, but real estate hadn't caught up. Mm-hmm. So he said, he sold all of his California holdings, 1031 them into Dallas. And I thought, well, if it's good enough for Robert Kiyosaki, it's good enough.
Yeah, good enough, right.
I jumped on a plane, and Rich and I came back with 5 properties from Dallas. because we couldn't believe it.
Right.
We couldn't believe what we could buy. Beautiful brand new homes in up and coming neighborhoods where there's a new freeway coming in and it was on a lake and A+ schools, wonderful neighborhoods. We were buying brand new homes for $140,000 that rented for $1,500. You know, it was just like
Ideal.
ah. And I was a mortgage banker, so I could do my own loans and that no money down. It was insane. I should have bought 20.
Well, you bought 5 is pretty good. I mean, that is kind of considered jumping into the deep end when you're going from 0 to 5, although you did have 2 downstairs, which was helpful.
Right.
So it sounds like you started to develop your own retirement portfolio, your own financial freedom. Why were you doubling down in real estate if you were a loan broker? Why do that?
Well, it was because of my show and the brilliant people I got to interview who explained to me that you can borrow, you know, you can't go into a bank even today and say, I've got this brilliant business idea. Will you loan money on it? No, they're, you know, very rarely are they going to do that. Yeah. But if you go in and say, I've got this great property, will you loan money on it? Well, the answer is usually yes.
Yeah.
It's just
as long as performing. Performing, sure. Yeah.
That gives me confidence. And another thing to look at is in this bailout, the trillions of dollars of bailout, it was mostly real estate. The Federal Reserve just did unlimited QE to keep the banks lending to real estate. Mm-hmm. That tells you something, that the government wants real estate to stay strong because it really affects the rest of the economy, and they're throwing trillions of dollars at it to make that happen. It's interesting.
80% of the world's wealth is held in real estate. I mean, I don't know the most current statistic, but I know that, you know, from several years ago, maybe it was 3 or 4 years ago, was the last time I heard that, you know, 80% of the world's wealth is not held in stocks or in pensions, that the bulk of the world's wealth is held in the land that people own. And that is real estate. And
comparatively speaking, the US is still really cheap. Like if you go to, I went to visit my friend in Switzerland, and granted Switzerland's tiny. They don't have a lot of land to build, but she had this little tiny condo that was, I don't know, 1.2 million. You know, in a city that really nobody knows about. You can go to Chicago and buy a house for 120,000, you know, and that's a major city that people know about.
Well,
so,
you know, look at Russia, St. Petersburg in Russia, you look at Singapore, you look at, you know, Japan, you look at some major cities in other countries, like you said, and really it is quite inexpensive in comparison to the capitals of some other nations. Not that we're the capital, but in major cities of some other nations.
It's true.
Even New York. I mean, you look at New York and it's, you know, but yes, continue. I apologize for interrupting. Continue.
Oh, no, but it's just people think, oh my gosh, prices have gone up. They can't keep going up, but
yes, they can.
They can.
Yes, they can. The answer is yes. Actually, they can keep going up.
Yeah. So I guess, you know, why, if I was making an incredible living on mortgages, because once I learned the power of leverage, and I was interviewing these people that were maybe 30 years old and retired already because they didn't go to college, and they started at 18 flipping houses or living in a house for 2 years and then selling it, keeping all the gain tax free and doing it again and this and that, and all these different strategies for building wealth. You know, it's like our phones were ringing off the hook, and I was one of the busiest mortgage brokers, so I was making plenty of money, but I was working for that money. Whereas real estate is like I put in my book, it's like buying a golden goose, you know, and you could buy one or you could buy 20. And in each of these little golden gooses, shoot out money.
Exactly. They keep pushing out eggs that are gold. Every month they give you another little one and another one and another little one and another little one. And so, but real estate also has risks, right? I mean, this is, you know, you work for somebody else, or, you know, maybe not as a loan broker, you're more of an entrepreneur, but you know, there's a certain amount of, well, if I apply my sweat equity, I get something out of it and it can be consistent. But again, maybe you're already an entrepreneur. Why develop a portfolio of 5 units and then you probably bought more units? So, you know, yes, you're listening to very wise people, but, you know, I know a lot of people like, I'm not going to go to Texas and buy 5 properties.
Yeah, there is risk for sure. And there's risk in everything for sure. What I learned is that there's ways to mitigate it for sure. One of the things that people freak out about is, I mean, look right now, California's on literally on fire.
Literally on fire. Literally physically on fire in multiple locations
On
from
fire.
south to north.
And that's a scary thing. Now, if you own rental property, that's terrifying. But what if you are well insured?
Right.
So, you can get a check. So I know people who their house was worth more after it burned. So there is
Yeah, I know this too.
insurance for certain things. We really like Florida right now. And yet there are hurricanes there, and a lot of people won't invest in Florida because of that. But what we've discovered is if you invest outside of a flood zone and more inland, that insurance is actually pretty cheap, and you're covered. You're covered for that, especially if you make sure you're really well covered for that. There's some people that try to skimp on their insurance, but don't do that. Get a good insurance policy. And like in Texas, they have hailstorms every 10 years or so, and it absolutely destroys roofs. And guess what? Your insurance pays for a new roof every 10 years.
Every 10 years. That'd be lovely. I'd love a new roof every 10 years. That'd be lovely.
Exactly. Paid for by insurance.
So how much time do you feel like you need to pay attention to this portfolio that you've created in order to maintain it while you're still doing, your job is in real estate like mine, and your investments are in real estate. So the two, commingle very well. Yeah. But how much time do you feel like you need to pay attention to your portfolio? Does it help you? Does it hurt you? Does it move you forward? Does it take you away from your job of the Real Wealth Network?
I should pay more attention. For sure.
We all should pay more attention. We all should pay more attention to our portfolios if we're doing something. Yes, no, I agree. I'm with you. Go ahead.
We have really great property managers, and that's one of the things about Real Wealth that we created was a network of now 50,000 members. Obviously not all of them buy real estate, but we have a very, very large group. And so we've been able to negotiate with property managers, and they take care of us. If we've got somebody who's, doesn't feel like they're getting what they need from their property manager, we'll make the call and say, you don't want to upset us because we're a large percentage of your holdings, and we can remove, we can move these people to someone else. So we have a little leverage there. But even so, they're just really good people that we found. And it's taken us a long time to find these group of property managers with the same kind of values that we have and integrity. And I will say property management has improved since when I started. When I started, it was mom and pops. There were not systems like there are today. When the hedge funds came in about 2012, because property was so cheap and they were like buying it up everywhere, well, they had to figure out how to manage it. So a lot of software was created during that time, and a lot of systems to manage large portfolios. So it's gotten better. There are now franchises like Real Property Management where they have, it's a franchise, so they've got like a group lawyer they can all use. They have training and they use systems. So it's way, way better now. And because of that, literally, I finally, Rich got all of our properties on a really sleek, spreadsheet, and we know to the penny what we're actually making on them.
Yay! Woohoo! Congratulations!
Hey!
It's amazing how much work that takes for our own portfolio, right? We help people with it. We'll analyze other people's portfolios, spend time with them. In particular, right? That's one of the things the Real Wealth Network does. Right?
Yeah.
You do the consulting work to help people identify what's the right next asset inside of their portfolio, and then you help to set them up with that asset, right? At least that's my understanding, right? I'm putting the right words in your mouth because I don't want to speak for you. But at the same time, then it was time for us to analyze our own portfolio. It's like, oh, wait a minute. When was the last time I calculated all my, I make sure my property management sent me all my checks? And
you got to pay attention because, there was one time, there's been several times where property managers started being late on the rent. And then, we started to look into it, and they were literally imploding. Sometimes property managers will grow too fast and they'll hire too many people, and they don't really know how to manage their affairs, and they'll start tapping into the rental, the deposits. and
Creative
rents,
habits. Yeah.
and they implode. And that happened to me twice, where I just didn't even notice. Like 2 or 3 months in, I'm like, oh, we haven't received our rent.
Right.
And if we had just kind of known and been on it every month, we would have caught it earlier.
Yeah.
So you do have to pay attention, but we don't as much as we can. No, I'm not. Rich really handles and manages most of that now.
Yeah.
But when it's under good property management, it's, I don't know what, a few hours a week really is what's needed.
Yeah. I mean,
or a month.
Yeah. I mean, yeah, potentially it's a few hours a month, right? So
Yeah.
like you said, it depends upon how many properties you have. So I'm going to ask you, maybe it's not a question, maybe it's not a question, but you went through a huge thing with really, I mean, when your husband was ill and, he needed time to recover, and you really doubled down and you made the choice to be the financial stability for your family, and you used what you had, your radio show and the things that you were doing, and you eventually became a loan broker. Like, the thing about life, but real estate also, it kind of grows us up, right? It's just like, they see, there's the smile. For those listeners who cannot see the smile, there's the smile. It's like, yeah, no, SHIT, it grows us up.
Yeah.
Right.
Yep.
And so, can you give us a story, and maybe what you learned from it? How did it grow you up and make you a better person, or at least maybe better at taking care of yourself? Whatever your lesson was from it.
The lessons are constant, of growing up. But, I can tell you one big growing up was,
Sure.
I became more well-known and more of a name in real estate because of being a woman and being one of the first podcasters in a large group. I mean, I think when Rich put my radio show in podcast form, I was one of the first, and all of a sudden I went from having a San Francisco audience to a worldwide audience. I had someone flying me out to Australia to meet with 1,000 investors, and I was immature. I was immature as an investor and just as a human. And I wasn't ready for that kind of celebrity. When they flew me out to Australia, I mean, I couldn't even go to the bathroom without people following me in to get my autograph. It was wild. So I didn't know I didn't understand the responsibility of it. I did, but I wasn't experienced enough. So luckily, right about that time, one of my listeners said, I really want you to meet this developer. Because this is 2009. He's like, he has every 10 years or so, he's the guy that the banks called to offload these distressed assets. And he's got all kinds of deals, but the banks were shut down. The only way they could get money was through syndication. Well, now everybody's syndicating, but I didn't know what it was, and most people didn't know what it was, and there wasn't books on it that I knew about. So, basically he was able to find these insane deals, like 27 brand new waterfront townhomes in Portland that we were able to get for $3 million for the whole thing. It was probably worth 20 million. So he's like, can you raise $3 million? Can you raise 3 million? I'm like, I don't know. So I sent out an email to our list and said, we got this great deal. Are you interested? And I raised the 3 million in about an hour. But then one of the people said, this isn't actually the way you're supposed to do this. There's like a whole process, and you have to file it with the SEC, and you have to have a PPM and an operating agreement. I was like, oh, okay. I hired an attorney. So, it's just, I felt like I just had to forge the way, because I didn't know what I was doing and I didn't know how to ask. But so that deal was incredible. Investors made, 25, 30% annualized during the worst part of the recession. But then I did another deal that was terrible. So I just didn't know, and I'm still learning. One of the biggest things I learned through that is really, whatever deal you do, make sure that somebody on your team has done that same deal many times, that you are not investing somebody else's money on something that nobody has done before, unless the investors know that and they know they're taking a risk. So that I was able to raise money to invest in a startup. And the first thing I said is, don't invest in this unless you plan on losing every penny, because you probably will. But if it goes well, it might go well. Well, they ended up losing like 4%. I was able to get most of the money back, but nobody complained, you know, because it was like, I warned you. But yeah, the second deal I did, which was very similar to that Portland one, but it was in Oakland, in the Oakland Hills overlooking the bay, just a completely distressed subdivision, almost finished. But the guy, my partner, just hadn't done that before. So it ended up being a very difficult thing. So I had two deals, very similar, with one extremely experienced developer and one who was experienced in flipping homes, but not flipping subdivisions. So it was a different thing, and it was difficult. It was a big loss. So yeah, that's lots of lessons learned.
So it's amazing that you can really learn from a deal to a deal. You know, I'm a deal to a deal that's actually very similar. But again, your team, right? To me, your team makes all the difference in the world. Like, one of the things that the two passions that I've learned through painful experiences to pay attention to is the economy and my team. Those are the two things that will sideswipe without me knowing it's going to, without me being aware of where the weakness is. Like, I can do all the forecasting I want. I can look at all the numbers of the deal I want. I can look at the performance that I've got set up, and I can base them upon some version of industry standards. I can base them upon history of what has happened in that market. But if the economy takes a significant turn, or if a team member either doesn't know or falls down for some reason, whatever that reason is, it will define if it's like a perfectly good investment and make it something that really is, you know, beyond difficult, to, you know, not profitable.
Well, you know, that's exactly it. I mean, anytime you do something new, or, you know, there's a learning curve. So I have a family member who kind of saw what we were doing. It was like, oh, we can do that. And they just bought the house next door and thought they just renovated on their weekends, you know, and it ended up being a loss, big loss too. So again, anytime you do something new, whether you're using your money, and definitely if you're using other people's money, make sure there's somebody on your team who's done it many times successfully, whether that's an advisor or somebody really a partner in the deal.
Yeah. So learning lessons. So real estate breakthrough, right? Because that's the name of the show, is, you know, what are your breakthroughs? And your breakthroughs are, you know, you've lived through a very difficult experience and you simply chose to not believe a diagnosis that you and your husband clearly have moved forward through, which is amazing. You know, you've learned through experience to know that your team is truly important, and that, you know, you recognize your own immaturity, not that you're not good-hearted, not that you weren't educated, not that you hadn't listened to thousands of hours of interviewing people, but that you were younger, right? Younger in your professionalism. And that was a learning experience for you as well. And real estate will constantly teach us. You know, I feel like I'm every 10 years or so, I seem to be learning a lesson. That's interesting. The market cycles every 10 years. I seem to cycle every, no. But it is very similar. I mean, there is a lesson every time. It's, you know, growing capital and preservation of capital. And the Real Wealth Network, really, I based on your reputation, seems like you guys really try to guide people through that to investments that are good over a long period of time, that fit inside of their portfolio, which is why you do the consulting work with them that you do, and the educational work, so that they're knowledgeable about what they're investing in. And again, I am projecting onto you what it is that you guys do. I am repeating things that I've heard you say in the past.
That's it. And we're conservative, because I've seen, you know, I've lost everything in the past. I've seen family members lose it. I saw my dad lose everything. Right. So we're conservative, but also aggressive at the same time. That's weird. I know that's kind of a weird combo, but I mean, even now, I'm not really a super detail analyst type person, but I can see big picture stuff. And I love data, because I can look at the data and interpret it somehow. So after learning from Kiyosaki, like this importance, like you said, of really understanding market cycles and using that momentum. It's almost like, this is why I look like this, as I went surfing today. And, you know, you paddle right and you get on the wave at the right time. And if you get the ride of your life, well, the person next to you doesn't.
Right.
So, you know what I mean? So, it's like when you time it well, then it's even better.
Mm-hmm.
So I learned that so early because after following Kiyosaki and buying those properties in Dallas, which were near jobs, near all this job growth, they were affordable. They were within the median home price of the area or below, even below. And yet there was all this infrastructure growth. So we thought, this area is going to pop, even though people laughed at me and they're like, oh, honey, you're leaving California where, it's always going up in value, and you're going to Texas where it never does.
Right.
Like,
Yep.
But land in Texas, the prices will never go up. But it's like, I think that's wrong because I'm seeing the data, and the data is showing people going there and jobs going there, and the cost to build going up, and a new freeway going in to this area where there's A-rated schools. I think you're wrong, and even if I'm wrong, I'm cash flowing along the way. It's okay.
Right.
So those properties tripled in value in a 10-year period, along with the cash flow. And it was because these things were in place. So now I'm seeing the same trend and even accelerated now because of Corona, of people getting out of the big cities, getting out of the expensive cities. There's a massive amount of people on the verge of retirement who don't want to mess it up this time. They did it already 10 years ago. They want to retire, and they are getting out of the areas that are high priced, that are anti-business, and they're going to Texas, they're going to Florida, Alabama, Nevada, Arizona, everywhere. They're going everywhere and anywhere, but they're getting out of the cities. And so our study of demographics was to, get ahead of that, and buy same thing. Even today, 15 years later, we're buying brand new homes for $140,000, just like I did 15 years ago in a new area that's up and coming. So it's cool. It's like the opportunity is still there. And in the middle of this insanity of coronavirus, these properties have only grown in value, and the applications for them have increased. There's more demand. Their prices have gone up, rents have gone. It's like, I can't even believe it. But the plan that we had has just accelerated through the last 6 months, which feels really good this time around, that we were in front of it.
Right. All right, Kathy, so we ran out of time. So do me a favor, give people your contact information for Real Wealth Network so they can find out more about your educational work and the consulting you do and how you help people get placed in solid assets for their retirement in residential. I think primarily residential and multifamily real estate, is that correct?
Mostly 1 to 4 unit because we like the financing on that, but also occasional multifamily.
Yeah, I agree. 1 to 4 unit is a little.
I think we're going to have a lot of multifamily opportunity coming up. So.
See, now I wish I had more time. Now you make me want to ask you that question. What are you saying? All right. So thank you so much, Kathy. Give us your information so people can get a hold of you.
All right. realwealth.com is our website. It's free to join. You'll get access to so much information and webinars and teams in different markets, property managers and rental homes that are available. realwealth.com. And then the Real Wealth Show is my podcast, and Retire Rich with Rentals is my book that you can get on Amazon.
Lovely. Thank you, Kathy, for your time. I so appreciate it. You take care, and I look forward to either seeing you at another meetup of some kind or right back here on a virtual meeting. So
I would love that, and we're not that far, so we should hang out.
No, we're not that far. And you can live more in Southern California than Northern California, which is why surfing is so, a good thing now, right?
It is.
It is. All right. Thank you so much for listening to the Real Estate Breakthrough Show. My name is Christina Suter, your host, and tune in next week.